Hi there, welcome to Kneppy Invest. When I first started investing well over 10 years ago, the only sort of investments I was interested in was buying individual companies on the ASX. I was not interested in REITs, which is real estate investment trusts. I was not interested in ETFs, which is exchange traded funds. And I was not interested in listed investment companies or LICs. But as I've matured as an investor, as I've gained more experience and as my risk tolerance has lowered, so I've become a little bit more risk averse, I have begun researching these different types of investments. And more than likely, I'll do a video on REITs in the next few weeks because REITs are looking interesting right now because REITs share price or valuation tends to come down in a rising interest rate environment. And a lot of these REITs right now are trading well below the net assets or net tangible assets, which means they are attractive based off the history or the valuation history of those companies. Now, ETFs, I have bought 2 ETFs over the past, we'll say 9 months, and more than likely I might add to that over the next few years as well. And I'm looking for really good quality ETFs. So if you don't know what the difference is between an ETF and a listed investment company, an ETF is open-ended and a listed investment company is close-ended, which means close-ended means there's a limited or a set amount of shares on issue, which is not true for ETFs. ETFs usually have lower fees. They tend to be more transparent in what they're invested in and contain. And LICs are more likely to be actively traded. So you're going to have active fund managers trading companies in and out of LICs, while ETFs more than likely track either an index or a set group of companies. So I have started researching some LICs. And in today's video, I'm going to look at the second largest listed investment company on the ASX, Argo Investments. So I started looking at this company just after they released their full year results. And when I was going through that annual report, I found something really interesting towards the end of the annual report. And that is a list of all the investments they have right now. Not only all the investments they have, but all the buys and sales or sells. So all the transactions they have made over the past year. I found this really interesting because this gives me and probably the investors out there insight to those companies that are popular among fund managers or listed investment companies right now, and those companies that are out of favor. So in today's video, I'm going to go through all the transactions that Argo Investments have made over the past year. There seems to be quite a few LICs on the ASX, and this is from the Eureka report showing us the top 9 or biggest 9 LICs on the ASX. And by far, the 2 largest are Australian Foundation Investment Company, ticker code AFI. Market cap of that LIC is 9.4 billion. And the second largest is Argo Investments with a market cap of 6.8 billion. The third largest is WAM Capital with only a market cap of 1.98 billion. So fair difference or fair bit of a gap between the second and third largest LIC on the ASX. The other good thing about this Eureka report table, and this is free from Eureka report, is it gives you the premium discount to NTA, where the company or the LIC has a performance fee, the yield, price, and of course the market cap. And you can see that Argo Investments is right now trading at a premium to NTA, 16.65 premium, while Australian Foundation Investment is trading at a 26.71 premium to NTA. And the reason that's interesting is because I have found in my limited research I have done that a lot of LICs actually trade to a discount to their NTA. So these 2, or the 2 largest LICs on the ASX, tend to be favoured among investors. So there is a premium attached to these 2 LICs. So more than likely, the managers or the fund managers that are trading or being more active in these LICs are more favoured. They've been doing a good job, those sort of things. So I'm not sure at this point in time whether I should be looking at those LICs that are trading to a significant discount to the NTA, because there could be a reason behind that, while these 2 biggest companies are trading at a significant premium to the NTA. And I'm not sure if that's a good thing or a bad thing moving forward for the future valuation of those companies over the next 3 to 5 years. I've already mentioned that one of the most fascinating things I found about the annual report from Argo Investments is we can see all the transactions the company has made over the past year. And that is found on page 72 of the annual report from Argo Investments. I'm not sure if this is something all LICs have to do by law to give the investments, their investors, or the market at large, a list of every single holding in their portfolio, but it does give a little bit of transparency. So even though I did say ETFs tend to be more transparent in what they're invested in and contain, this does give a bit of transparency to these LICs. Another thing Argo Investments did is they broke down their portfolio into different sectors, and we can see what sectors they've favoured over the past year. For instance, in 2021, 14% of their portfolio was banks. Now it's only 12%. In 2021, only 4% of their portfolio was energy. Now it's up to 7%. So it seems like either they're buying a lot of energy companies right now and they're selling banks, or energy or the valuation of energy companies in their portfolio have gone up significantly in the past year. Another thing the company did, and this is not found on page 72, this is found towards the start of the annual report, is they listed the top 20 investments in their portfolio. So that's on the left-hand side of this slide. On the right-hand side, I've just listed the top 20 companies on the ASX by valuation. So I just wanted to see if this company, Argo Investments, this listed investment company, is a quasi ETF. And I wouldn't say it's an exact ETF, but there's a lot of similarities between the top 20 investments of Argo Investments to the top 20 companies by market cap on the ASX. For instance, the largest holdings in Argo Investments is Macquarie Group, and that is the 6th largest company on the ASX. Second largest company in their portfolio by value is BHP. That is the biggest company on the ASX. CSL is 3rd, CBA is 4th, and those two are the 2nd and 3rd biggest companies on the ASX. Rio Tinto is 5th, and that is 15th biggest company on the ASX. Wesfarmers is 6th, and that is the 9th biggest companies on the ASX. So there's a lot of crossover between the top 20 investments in Argo Investments and the top 20 companies by valuation on the ASX. So even though it's not exactly like an ETF, it is quasi like an ETF. Now on to the transactions that interested me that this company or LIC did make during financial year 22. This is not all the transactions they made, and I won't be talking about all the holdings within the portfolio. If you do want to look at the total portfolio, you can go to the annual report, which is found on page 72 or whatever it is. So the first interesting transaction is the complete disposal of AGL shares. They did hold $18.8 million worth. Now they hold zero. So obviously Argo Investments is not too keen about the future of this company. The next interesting transaction the company did make, and this is probably just to me, is a significant purchase of Horizon shares. The company had already owned 13.2 million shares, and they added 6 million more shares, increasing the value of their Horizon holdings from 49 million to 73 million. And to be honest with you, the reason this interests me is because I am a Horizon shareholder. Now, this company won't grow all that quickly over the next 5 years, but I do think this company is cheap, and they do also have a nice dividend yield. So it seems like perhaps that Argo Investments are thinking the same thoughts as I am. The next interesting transaction from Argo Investments is a small cap company that is burning through heaps of cash every single quarter, every single financial year, and that is Carbon Revolution. They do wheels or tires or something like that. And they have added 2 million more shares to their portfolio, increasing it from 4.1 million to 6.1 million. But you'll notice the valuation of the shares has significantly gone down in the past year from 4.6 million to 1.8 million. And the simple reason why the valuation has gone down, yet the shares they hold have gone up, is because the share price of this company has absolutely tanked over the past year. One of the interesting things I found going through Argo Investments portfolio and the holdings is just the new positions they have begun in the past year. And the first 3 of those new positions is 3 companies I know nothing about. Clarity Pharmaceuticals, Chrysos Corporation, and EBR Systems. Only small positions, ranging between about 3.6 million and $4 million. But I have decided, because Argo Investments have decided to put a little bit of money into each of these three companies, I need to do some research to try to find out why Argo Investments is positive on all three of these companies. Argo Investments already held quite a few shares in email payments before the start of financial year 22. In fact, they owned 5 million shares to the value of 17.3 million, but they have significantly added email payment shares to their portfolio. In fact, they increased their holdings by about 12 million, or maybe, 12.4 million. And even though they increased their holdings by 12.4 million, the value of email payments in their portfolio had value increased by $4 million. The reason behind that is because email payment share price has gone down a fair bit over the past year. So obviously, and this is just me making assumptions, Argo Investments thinks email payments is undervalued here just based off the significant amount of shares they have purchased in the past year. Another company Argo Investments probably think is undervalued is Genworth Mortgages. They have bought a significant amount of shares in this company, almost 4 million shares, just under 4 million. So we'll say 3.7 million. And the value of their holdings in Genworth has increased from 1.7 million to 12.5 million. So this is another company I have done very little research on. And obviously, Argo Investments is bullish about the future of this company. So maybe I should do a little bit of research on why that is. Now, on to 4 other companies they have started positions in, and some of these companies are fairly well known. So unlike those first 3 companies they've started position in, I actually do know 3 of these companies quite well, and those companies are Megaport, IDP Education, and Liontown Resources. I don't know much about Judo Capital, but they have begun some bigger positions in these companies. In fact, their position in Megaport is 10.9 million, Liontown Resources 8 million, IDP Education 5.8 million, and Judo Capital 3.9 million. It was a little bit surprising to find that Argo Investments also has a fairly significant position in Novonix. Even though this is a loss-making company, not a lot of revenue, they are obviously, well, this company is obviously fairly bullish about EVs and electrification of vehicles and stuff like that, because at this point in time, the value of Novonix shares in their portfolio is at 30.9 million. Now, they did sell some shares during the year. In fact, their shares have decreased from 14.2 million to around 13.55 million, but they still owned a significant amount of shares in this company. The next company that I did find interesting that Argo took an initial position in is Stanmore Resources. And the reason this is interesting is simply because Stanmore Resources is a coal producing company. They bought 6.75 million shares, totaling a value of $13.1 million. So obviously, if you are the sort of investor who really values ESG, perhaps it's a good idea to have a look at the holdings within an LIC, because you might find some coal companies in there. Another company that Argo significantly increased their position in is Superloop. Now, last time I had a look, share price of Superloop was down around about 70 cents, or maybe just below 70 cents. But obviously, Argo is excited about the future of this company. And obviously, they think this company is really cheap right now, because they increased their holdings in this company by about 20 million. And the value of their holdings has increased from $1 million to 15.7 million. So obviously, Argo sees something in Superloop right now. Now, it might seem like Argo Investments have been buying a lot of shares, because I really have only been showing you additions to their portfolio and significant additions to companies they already own. But they have completely sold out of some companies, including Spark Infrastructure. They did own 7.1 million shares. Now they own 0. Now, there are a few other companies they did sell out of. And the reason they sold out of some companies is because those companies were taken over. For instance, Oil Search, Milton Corporation, Sydney Airport. So they did have significant or pretty big positions in some of those companies, which added a lot of money to their cash positions. So that's why it does seem like they've been buying a lot of shares in all these different companies. Now onto the chart for Argo Investments, and over time, it does look like this the share price of this company does gradually increase. So I did look at the 5-10 year chart, and the share price has gone up over time. But right now, the share price is struggling, and there is a nice little support level right on $8.80. We did see a share price of this company reach $8.80 back in September, October last year, and then again in June, July this year. And both times we saw the share price bounce, and the share price right now is struggling. It has fallen from $8 or $9.80 down to $9.10. So it's not far off that $8.80 support range. So right now, share price is not an uptrend and is trying to get into a downtrend. If the share price does fall below $8.80, that would be a negative sign, sort of a bearish sign moving forward. And probably the other thing you've got to keep in mind here and take notice of is the discount or premium to NTA. And right now, Argo Investments does sell at a premium to NTA. So obviously, there's a lot of participants in the market that are fairly bullish about this LIC. That's all I have for this video. Looking at Argo Investments, a few of their transactions in financial year 22. So they did begin quite a few positions in companies that are well known and a few companies I know nothing about. So it is really interesting to see a listed investment company, particularly a fairly high quality listed investment company. And I'm making that assumption based off the fact that they are selling at a premium to NTA. And if a high quality listed investment company has been buying shares in companies I know very little about, maybe it's time I should do a little bit of research in those companies. So that's the plan moving forward for me. And that's actually a good thing. And one of the positives about looking at these listed investment companies and report and their holdings is finding companies you know very little about. So it can give you some ideas, some investment ideas moving forward. So if you have any questions, any thoughts, any ideas, anything, just leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.